Thank you for joining us at XM.com for the Daily Market Comment by Haralabos Pisuros. I'm Christina Marujas. The US dollar continued trading lower throughout most of Tuesday, finishing the day down against all but one of the other major currencies, despite a late rebound on reports of a missile explosion in Poland. The greenback had been sliding prior to the US PPI data and fell even more after the numbers revealed that producer prices slowed by more than expected in October in both headline and core terms, adding to the narrative that inflation may continue to ease in the months ahead. Investors are now almost fully convinced that the Fed will proceed with a smaller 50 basis points hike at its December gathering, assigning around a 90% probability for such an action. They are also pricing in almost 2 quarter-point rate cuts by the end of next year. Therefore, the dollar may continue tumbling as we get more data and remarks supporting a less aggressive Fed, but the pricing of 2 rate cuts next year likely opens the door for a decent rebound in case of developments point otherwise. An upside surprise in today's retail sales could very well be that initial trigger. EU and US shares added to the latest recovery yesterday, with the interest rate-sensitive Nasdaq adding 1.45% on the increasing hopes of a less aggressive Fed. The gains could have been bigger if it wasn't for a sudden missile blast in eastern Poland near Ukraine a couple of hours before Wall Street's close. In reports earlier today, U.S. officials said the initial findings suggest that the missile was fired by Ukraine at an incoming Russian missile. The flight to safety extended during the Asian session today, with most Asian stock indices trading in the red and the U.S. dollar attracting some safe haven flows. However, the recovery and the greenback ran out of steam as investors began preparing for the European session, while U.S. futures are pointing to a higher open on Wall Street. In the United Kingdom, inflation rose by a full percentage point to 11.1% year-on-year during the month of October, suggesting that real wages may have slipped deeper into negative territory and that disposable income may have hit a new record low. Traders are now split on whether a 50 or 75 basis points increment should be delivered by the Bank of England. They also lifted their terminal rate to 4.57%. However, the reaction in the pound was not huge. Pound dollar rose around 30 pips at the time of the release. Perhaps pound traders preferred not to enter large positions ahead of tomorrow's budget announcement. Chancellor Jeremy Hunt is expected to announce tax rises and spending cuts, which could weigh on the Bank of England's already bleak projections and thereby revive the notion that a 50 basis points hike at the December gathering may be more appropriate. This was the Daily Market Comment. Thank you for joining us at XM.com.